Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, December 27th, 2016, and this is the Daily Report for Gold and Silver. We have a substantial rally underway in the precious metals markets. I would call it moderate to strong, with platinum leading the way in terms of percentage gains, up about 3% on the day, followed by silver. But first, let's take a look at gold pricing. Gold is closing up over 0.5% on the day, 1140. That is our current print. That's basis most active futures contract in the COMEX exchange. It is traded to a high of 1151 and a low of 1132. So we're closing really mid-range, and we do have actually a fairly nice range on the day. The real question is whether or not recent activity in the precious metals markets is giving us a strong indication of support, or whether it is some sort of a trap. And that is exactly the topic that we will cover on today's Daily Report. First, let's also take a look at silver. Silver closing up strongly, gaining 1.5%, trading just at $16 per ounce, slightly under when we look at spot. But in terms of COMEX futures, we're at $16, the low $15.75, and the high on the day $16.10. So traders, it is hard to believe, but we have just begun the final concluding week to 2016. My God, how quickly this year has gone by. And we have seen some extremely interesting activity in the precious metals markets. As we talked about on Friday, in which I released our year-in review. Of course, this Friday, I will be doing our 2017 forecast for the weekend review. But as I spoke about on Friday's show, we certainly had a unique scenario develop this year, and it was unlike anything we have really seen since 2012. So what we are talking about is the fact that since 2011, if we look at the yearly high each year, such as the all-time high that we got at 2011, and then the highest high the market traded to really in 2012, 2013, 2014, and 2015, what we talked about is the fact that each year, the overall characteristics is we had a lower high than the previous year. That ended this year, and I really put that as our focus on the year in review, because I think that that is the most substantial characteristics to really look at when we look at the year that is about to end in about a week. And the fact that we made a higher high than any previous high on a yearly basis, I believe cannot be overlooked, and I believe that it's substantial. The second thing that we can say is that the market's rally that we had to take us to this new high was not only substantial, but we are still approximately at a 7% gain in terms of where the market opened at the beginning of the year here, and our current pricing, which is sitting roughly at 1140. Now, that being said, we are also seeing some signs of potential support, and we're seeing them at a price point that is fairly realistic in terms of one we would look at. And to really look at that, I really need to go ahead and uncompress this chart. And when we do that, we do see a couple of interesting facts kind of jump out at us. First of all, if we take a look at the low that occurred roughly a couple of weeks ago, it comes to precisely a 75% retracement, and that is a retracement from the beginning of the rally, which occurred at the beginning of the year, to the yearly high, which took us really through June and July and culminated at about 1380. From there, the current retracement, as I said, has taken us to about 75%. Now, why that is interesting is because if we are going to label this rally as an A wave, concluding at 1380, our B wave should be anywhere between 50 and 75%. We've obviously gone well past 50, but we do see the fact that we hit a bottom at 75%, and over last week we traded above that, and so far this week we are trading above that, and we are also in green. So that we could see something like, if we had a continuation of the rally throughout the week, is this candle would, of course, turn green. And if, in fact, it turned green, what that would mean is that we could identify then a pattern simply called a three-river morning star, and that would be based upon this weekly chart here. So it is certainly something that we want to watch for. We know that we've had a dynamic correction. We also see in terms of a technical basis that this market is extremely oversold at this point. We did make a new high on the year, and at least on a tentative basis, we have some support in this level. So we are certainly in a holding pattern, but we will look to implement a long position should we get a stronger confirmation that a bottom, in fact, is in place. And I want to take a quick look at silver to close the show out today. We did have silver close up well over 1.5%, 1.66% gain, up 26 cents, trading over $16. We also noticed some uniqueness in terms of how silver was trading in relationship to gold, and that was the fact that whereas we saw gold kind of go straight through the 61% retracement back last month, silver actually formed a base at this particular price point, traded higher before falling over the last two trading weeks. Now, when we look at this particular chart, it is a weekly chart, we are absolutely still in a bearish scenario in terms of the longer term moves in the market. However, the signs today are alluding to the fact that we could also see some support entering the market at this point. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.